What's good, guy? What's good, guy? What's good, guy? This is your boy FX Damage G, right? So today we're going to talk about Fibonacci, right? Fibonacci or Fibonacci or anyone you just want to call it. But this tool is one of the go-to in the Forex market. Like, it's a tool that everyone has uses it. Any big trader out there has once used Fibonacci because these are zones that this Fibonacci to literally just show you zone that you can't see with your naked eyes, right? So the first thing we're going to do now is we are going to know what the meaning of Fibonacci is. That is, let's know what Fibonacci is, what it's used for, and literally what it is about, right? So what is Fibonacci? Now, Fibonacci retracement is a technical analysis. It's a technical analysis tool that uses horizontal lines and percentages to help traders identify potential areas of support and resistance in the Forex market. Easy as that. We use Fibonacci to know where the support and the resistance is. And as you all can know, support is the bottom and resistance is the what? Is always the top. So in my next video, we're talking about support and resistance. Resistance, support, right? So Fibonacci retracement is a technical tool that uses horizontal line and percentage to help traders identify potential areas of support and resistance in the Forex market. These areas can help traders decide when to open and close position or when to set stops and limits. Now, we also have here some key points about Fibonacci retracement. We have the Fibonacci sequence, we have the retracement level, we have identifying Fibonacci retracement also, which is right there. So we're going to talk about this tree, Fibonacci retracement, and the sequence, and also the retracement level. As you all can know, I don't like creating a long video because it seems it's look kind of bored watching a 1 hour long video, and try to make it quick and direct. So the first thing we're gonna do now is to go to your trading view and let's edit our Fibonacci, because I have my own specific way of using my Fibonacci. Different traders and there are different way of editing their Fibonacci, because Fibonacci is a tool that you just want to customize this your own way, the way you feel like works for you and your strategy. So this video, I'm going to be showing you how to edit a Fibonacci tool. And this Fibonacci tool that we are gonna edit you're gonna see the magic in it. Like, it's a crazy tool. My edit is a crazy edit. Like, I call it a golden Fibonacci tool. So let's see what it's all about. All right, so the first thing to do now is to go to your trading view and try to locate where the Fib retracement is. And as you can see, I think it's about it's right here in the, let's see, Fibonacci. Yeah, look at what. So you're gonna just click on the star right there, click on it, and the shortcut for it is Alt plus 5. So if it's kind of hard for you to locate, just click alternate F, Alt plus F. It will pop out your Fibonacci, and it won't look something like this. So it looks you see different lines and stuff like that. So once you've done that, click on your Fibonacci, click on this settings tool right there, and you go to your style. Now, when you go to your style, you see there will be some couple of buttons or check box right here that has been checked. So you want to uncheck all of them. Uncheck all of them. Do that now. You can uncheck all of them, and you can screenshot my Fibonacci settings. Screenshot it so that you can be looking at it some other time without you going back to the video. You screenshot it. Okay, once you've done that, so once you've unchecked all of them, these are the levels you want to be checking. Check the 0 level, check the 0.5 level, the 1 level, 0.62 level, 0.705 level, 0.78 level. And if you see that, okay, something like this, and if you see that this your level isn't the same digits, you can just edit it by typing 0.05 or any of the level that I checked and isn't the same coordinates with your own. You can just you can delete and type them in. Right? You can do that. So just remember, 0, 0.51, 0.62, 0.705, 0.78, and 0.5. So with that being said, with that being done, just click on your OK, and voila, you get something like this. So if you have started the Fibonacci, you can see it right here. So any tool you had to your favorite is usually highlighted here. So it gives you a easy access to it. Now, Fibonacci is easy as this. If you see that the market is in an overall downtrend, you do something like this from top to bottom. If it's in an uptrend, from bottom to the top, right there. Now, these are what called what. This, for example, this is resistance, and this is what. This is what. These are what I call the golden zone. Right? Remember, this is the word resistance, this is the support. If the market is on a downtrend, let's say the market is on a downtrend, this is what we are going to expect. To come into this Fibonacci, this level right there, and continue to the downside. So we know we can make money two ways. We can make money immediately the market start going up, then we'll put in our take profit in the Fibonacci. And we can also make money when it's coming down. And we're gonna put it where we put our stop loss on the buying side and a little bit lower. And we're gonna put our stop loss above the line, above the 70.50 level. And you see you can make money up and you can also make money down just by understanding the Fibonacci level. So this is a golden Fibonacci. This Fibonacci works. It really works. Your job is just to know where the swing high and the swing low is, right? So with that being said, let's get into the chart and let me show you that this is this really works. And during my winning streak as of September, I was using Fibonacci every day, and it's really bagged me a lot of money, and it really bagged my subscribers a lot of money. So me talking about my subscribers, you also go to your Telegram channel and type NFXTA, right? NFXTA. I think at the moment we are on 92 subscribers. Let me see, this is one of the fastest growing Telegram channel you can see out there. No advertisement, no celebrity. I'm not a celebrity or stuff like that, but it's really growing. We have subscribers coming in every day, right? So just go there, and the only pair I trade is what GBP USD. And I kind of say I've checked out there. I can't see any trader that is only trading GBP USD. People tends to know GBP Gold, GBP JPY, stuff like that, but no. I've put 3 years of my life into GBP USD, and you know what that really means? It means me and GBP are very close. So be rest assured, when you are taking my trade, you have an high chance of winning the trade. So with that being said, go on to my Telegram channel and type NFXTA, or I can put the link in the comment section below. Click on it, and once you've subscribed, come back to this YouTube channel and click and send done. Right? I'll put the link in the comment section below. Click on the link, go to my Telegram channel, subscribe, and come and tell me done on this YouTube video during the comment in the comment section below. Now, with that being said, let us go into the Forex market and analyze how to use Fibonacci. Right? So, and before we do that, let me give you guys a little tip. Fibonacci only work if the market is trending. That is, if the market is on the reasonable upside or downside, Fibonacci or on the downtrend. Fibonacci doesn't work if the market is consolidating or is in the ranging moment. Something like this, Fibonacci doesn't work. It doesn't work. So you only want to use Fibonacci when the market is trending. As you can see, it's on the uptrend right here, and as you can see, it's on the downtrend right here. So you only want to be using Fibonacci when it's on the on the downtrend or on the uptrend. When the market is trending, because that is what will make you to locate where the swing high and swing low is. So talking about swing high and swing low, what is swing high and swing low? And in the end of this video, I'm gonna share you a big tip on how to identify a valid swing high and a valid swing low. Because swing high and swing low also is kind of really trickish. You know what I mean? It's kind of really trickish. You might say, oh, this can be the swing high and market and draw Fibonacci, and market might not even enter your Fibonacci golden level and retrace, or it might pass your golden level. So you knowing the perfect swing high and swing low is a very, very big plus in your Fibonacci game, right? So, and I'm gonna tell you what to be looking at and what you should not be looking for, and what you should follow, and what you should what confirmation you can use to enter the trade. So immediately you use this Fibonacci. You know what you are gonna do for me? Just go to your trading view and backtest it and use it on any trade, and you're gonna see that it really, really works, right? It really, really works. I'm giving you this for free, and the only way you can appreciate me is to like the video, comment below the YouTube section, and say thank you very much for this explanation, stuff like that. Just try to motivate me to drop another video, because the only thing you can do to appreciate me is to subscribe to the YouTube channel and like the video, and also comment. And if you need any video, you can just put it on the comment section, and I'll be out there looking out for what topics you guys want next. So with that being said, the first thing we're going to talk about now is how well this Fibonacci works, right? So let's go to this chart and see how well this will really work. Now, without wasting much of your time, I think this right here is December 24th, right? So December 24th, we saw something like this. Markets were going on a uptrend for some while. Then we saw this gigantic candle that went to the downside, right? It really went to the downside. So what that means that now the market is shifting momentum to the downside. So what are we gonna do? We're going to take the highest points and the lowest point of the market. The highest point is right here and the lowest point is right there. And as you can see, where I call the golden level, this is where the golden level is. Tapped right into the golden level, and what do we see? The market moves to the downside. Now, it's entered the golden level and what is spiked down to the downside. Easy as that. Let's say we enter our trade, immediately it's entered the golden level, put our stop loss little pips away from the golden level, and put our take profit on the previous structure, which is right here, which is 100 pip. Imagine, guys, 100 pip. This is a crazy amount of money. 100 pip, just like that. I said we now extended a little bit. We'll have bargained something around $150 or $1,500 or $15,000, depending on lot size. So understanding this is a very, 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 very crazy skill or crazy indicator you can use in the Forex market. I think they should ban Fibonacci. No, they shouldn't ban it. Right? So you know what you guys get? See, 2 years old can also trade. Just by understanding the Fibonacci level, I'm not looking at any other thing. Only this video can make you a lot of money. Just watch the video and try to backtest and try to use it on your live trade, and you will see that it's gonna print you a lot of money. Trust me on this. If I said you trust me on this, trust me on this. Now, you see, we've gained profit from here, and as you can see, this is the highest and this is the lowest. And as you all know, this is an overall downtrend. Highest, lowest. What do you see again? Markets what respected the golden level. So let's say, for example, you entered it down, you sell trade from here, and just take profit below this zone. As you can see, market was moving to your take profit and thereabout, and the market starts to retrace. So this happened because of the festive period, December and stuff like that. Market isn't that strong, but Fibonacci, as you can see, Fibonacci really works. So some traders do take partial profit. So I think some traders have closed right there, giving a trade ratio 1. and our final take profit will be right there. So let's look for another scenario. Now we've done for the downtrend. Let's also do for the uptrend. As you can see right here, we have markets trying to pull to the upside, as you can see. So what we're gonna do now is we're gonna look for the lowest part and the highest part. This is the lowest part of the market, and I think after the reasonable pullback and rejection, I think this is where the valid high is, right there, right in this zone. Then as you can see, our golden level is right there. And as immediately the market tap into the golden level, it's rejected off the zone. And can put our take profit above the previous structure or the highs. And as you can see, this is a sweet profit giving us 2:5 risk reward. So Fibonacci is a kind of a great tool. It's a great tool to use in the price markets. So let's see. I think this down, breakdown, highest and lowest part. Let's draw the Fibonacci. And you see, tap into the golden zone, and we have a quick rejection. Buyers was in control, but immediately market sellers came in control and giving us a sweet take profit. Right? So this is just the fun part. Now, what you should look at and what you should not look out for while using the Fibonacci. The first thing you should look out for is to look for a reasonable trend. As you can see, this trend is kind of reasonable, creating a lower high and a lower low. Lower high, lower low, lower high, lower low, lower high, lower low. And then we have a little kind of market trying to move to the upside. You can see it's kind of a little of consolidation zone, but it's creating a lower high, lower low. So it's creating a higher low, higher low. Sorry, my bad. And as you can see, this trend right here, this is a sweet downtrend. As you can see, this is a downtrend, and I think downtrend we have a breakout of the downtrend. We test the trend and continue to the upside. So this will be for another video. As well, you can see this is a downtrend. Market isn't going above this line, so market always retest off this zone and go to that side. As you can see now, the first thing is let's say for example we drew with something like this. Okay, doesn't retest, but this is where it retests off. This is a swing high, this is a swing low. I'll talk more about that in this video. And you can only know about the trick when you watch the video to the end, because I'll be leaving you guys with a tip and trick during the end of the video. So stay tuned and watch the end of the video. Now, as you can see, this is a sweet downtrend right there. Now what we're gonna do is we're gonna take to the highest and the lowest, and as you can see, market has been respecting this multiple times. And you see the golden zone always get retested. Now, the only thing you want to be looking out for is a valid trend. A valid trend, as you can see, a valid trend, that means market's going to the downside. So this is what's gonna give you the overall movement on how to place a Fibonacci. So, because some traders do, let's say for example, the market is on a downtrend, and I don't know why some traders will start to take their Fibonacci to the upside. I don't know what you're looking for. Market is on a downtrend. Your Fibonacci literally won't work because you are going against the trend. Right? So what you want to be looking for is a valid trend movement. That means the trend moving in a specific direction, not consolidation and stuff like that. And as you can see right here, the market is moving on a downtrend, and everything you want to be looking for looking for a downtrend opportunity. Lower high, lower low, and you can see market taps into the zone, even though it was kind of slow. Tap into the golden zone, and what can you see? Market moves to the downside and giving us a 4:3 risk reward, as you can see right there. So Fibonacci is a great tool. Now, for the bonus, before I do that, first thing I want you to do for me is to click on the subscribe button and like this video. If you do that, I'm going to know. Alright, so that kind of motivates me to drop another free video for you guys. Now, I'm waiting for you guys to click on the subscribe button and click on the like button and comment thanks for this video in the comment section. So with that being done, these are what you should do. The first thing is locate the swing high. What is swing high? Swing high literally means the highest part of a movement and the lowest part of the movement. As you can see, this is a one straight movement. This zone right here, the highest part is usually called the swing high. Swing high. Right? And the lowest part is usually called the what? Yeah, you got it? You got that right. The swing low. As you all know. So, sometimes we can have in the market can just do something like this, It doesn't do that often. Kind of gets alligator of this kind of movement. But how are we going to know if this is a swing guy? Because traders usually do mistake and identify this as the swing guy, and they will draw that Fibonacci like this, and they put it on the swing low. And what the market will do, the market won't respect the golden zone. They'll be like, Fibonacci is trash or stuff like that, or Forex is scam. No, you are not doing what you are meant to be doing right. Now, for you to understand where the swing high and swing low is, that means there must be a valid break of structure. That means you must locate a break of structure. That means this movement is breaking a structure. And as you all know, break of structure trying means, markets breaking the previous obstacle and going to the upside, or moving to the downside. I think I've done that video if you don't know anything about break of structure or market structure, you can go to my page, to my YouTube page, and there are some videos I've talked about that. So as you all know, this is a break of structure right there. Right? So there must be a valid break of structure before we can use the Fib. Now, there must be a valid break of structure. That is the second tip. The first tip is to look for a trend. Second tip, look for a valid break of structure. And now the third tip is now to locate where your swing high and swing low will be. Now this is how to locate where your swing high and swing low will be. Okay, let's use the scenario. Now, let's start to draw the structure of this right there. Now we draw a structure, market creating a higher high and a lower low and stuff like that. Then something like this happen. Where is the break of structure? This is where the break of structure lies. BOS. Now the first thing we know now is that markets move gigantically to the downside, and it moves aggressively to the downside. Now we know the market is on a downtrend, so we know we are going to draw our Fibonacci from the top to the bottom, not from the bottom to the top. It's going to be about from top to bottom, right? So as you can see right here, the valid break of structure lies right there. Now that is the second confluence. The first confluence is the trend. Second confluence is the valid break of structure. Now the third confluence is to locate where the swing low will be. Now we've known that this is the move. This is the beginning of the move. And this movement that I have this break of structure. This break of structure is is a straight move to the downside. So where does the movement start? The movement starts from here, the beginning of this week, right there. So this was where, out of this time, market was moving to the upside and sellers were rejected. So this was where the sellers start to reject the price to the downside. Then we have the gigantic move. So this is where the swing guy is. And this is where the swing guy will be. This is where the buyers will start coming into the market. And there is a what break of structure. Always remember that there must be a break of structure. So this is where another break of structure lies. But for the swing low, we won't be using this as a swing. We just want to use this to confirm that the market is moving to the upside. So if you are to take a buy trade, that means you will be taking a buy trade after the break of structure have occurred, which this candle did, and we'll be taking our trade once the candle gets closed, and we'll be entering the buy trade right there. And that surplus below the break of structure, and I'll take profits where the Fib level golden zone will be. So with that being said, swing guy has been drawn, break of structure has been seen, trend has been confirmed that is a downtrend. Then what are we going to do? Now we are going to look for a what? A swing low has also been confirmed. Swing low has also been confirmed. So what we're going to do now is we're going to draw the Fib level from the top to the bottom of the swing low, and draw out the golden zone. Now, for those that want to once you've done that, you just have to clean away your Fib. Are gonna get something like this. So for those that enter when the break of structure happen, you're gonna put your take profit in the golden zone, giving us about a 60 pip. And immediately you get in the golden zone, you go out of the trade and you immediately enter a sell trade. Though everything is risk, but take calculated risk. And you make money on both sides. You make money to the upside, you also make money to the downside. I hope you understand that. So that's the three confluences you have to look for. First of all, you have to look for the trend. Second, you have to look for a valid break of structure. Thirdly, you're gonna look for the swing low and have a confirmation of the break of structure that the market is going to the upside. Then that's it. Let us do it for other trend. Now, like right here, we have the what? The first thing to look for is the trend. As you all can see, this is what is the downtrend. Right now, the second thing to look out for is what the break of structure. This is where the break of structure is. Previous. This was where the break of structure happened. So where was this? So as you all can know, this is the what? This is the one movement. This is the movement, like the movement. Where is the top of the movement? This is the top of the movement right there. That will be our swing guy. This is our swing guy. And where is the lowest? So this is the lowest, but we want to have a confirmation of the break of structure to the upside. And this is where the break of structure to the upside lies. This candle breaks to the upside. So that means this is a what? This is a valid break of structure, indicating that this swing low is indeed a confirmed swing low. Now, that being said, what I'm going to look for now is draw our Fibonacci from the highest to the lowest. And we're going to get our golden zone right there. So imagine we entering the trade immediately once it's entered. Immediately this move break to the upside. When time the candle is closed, and I can put our stop loss below this. And I'll take profit into this. So it's just a 1:4 risk reward. Kind of good, depending on what you want, depending on your lot size. Then immediately we get into the golden zone, we immediately enter for a sell trade. Now we target the lowest, the swing low, or I'll give it a little kind of peak. Alright, so with that being said, that will be all for this video. The next video, this Fibonacci has 3 parts. So this is part 1. I'll be dropping the part 2 very soon. And once I've dropped the part 2, I'll also be dropping the part 3. So once you've watched the 3 parts, you're going to be a good Fibonacci user, right? So for me to be able to drop the part 2, what I want is that yeah, I want you to like the video, and I want you guys to comment I have watched the video on the comment section for me to drop the second part of this Fibonacci. So with that being said, I'll see you guys in the next video. That is the second part of this Fibonacci. See you guys and do have a wonderful day.